Hello, I'm Jeff Saut, Chief Investment Strategist with Raymond James. And I've been asked to do this video this morning because of the stunning results that happened last night, which the polls really didn't predict. I actually am calling this Brexit 2. I think you buy this dip. Things are not going to fall apart in the U.S. Earnings momentum has turned. You made the earnings trough or the profits trough in the second quarter of this year. You saw that with the rebound in earnings in the third quarter earnings reports. They were expected to come in negatively by 2 to 3%. They came in positively by 2.7% for about a 5% delta, or better than expected. We think GDP is going to pick up going forward. You're not going to know what's going to happen under a Trump presidency for a good while. People are going to have to see what he appoints in terms of Supreme Court justices, in terms of Janet Yellen at the Fed, in terms of his cabinet. So you're not going to know in the intermediate to short term what's going to happen. But I think the economy is improving. I think earnings are going to improve. I think you'll get a less stringent regulatory environment, which I think is business friendly. I do think you'll get fiscal stimulus. I do think that they'll probably roll back some of the onerous regulations like the DOL and the fiduciary rule that's slated to go in I think it's April 15th. So calm down out there. This isn't the end of everything. This is an opportunity for well-prepared investors. Our models actually told us to raise cash at the end of August and the beginning of September as they were looking for a down period of vulnerability for the equity markets beginning in mid to late September. We actually thought that vulnerability was going to be over the last week of October or going into the election. So this pullback should not be a surprise to anybody that has been reading Raymond James research. We think it's a buy on this dip, and we think the secular bull market is still in place with another 7 to 8 years left in it before we get to the top of the current secular bull market.